It's Tesla. The shares are jumping. We did have a batch of upbeat news driving sentiment on Wall Street, including a note from Morgan Stanley's Adam Jonas. Pras Subramanian's here with the details. And we were talking a little bit about this note earlier, but it's very interesting that he looks at this company, and I guess he has for a while, as bigger than just cars.
Yeah, beyond an auto company is what he's sort of saying. If there's a way to drive his bull case, I guess, for the shares of the company next year in 2024, looking ahead to things that are non-auto, non-core is what he says to the business. And it's funny because he mentions in the note later on that he has got significant pushback from clients about this, and he's still saying, no, I'm a true believer in this stuff. Like, for instance, Optimus robot, Tesla adjacent technology, tech that could upend the label market, Dojo supercomputer. We talked about this before. The supercomputer that can be used for any number of purposes like AWS, in that sort of a realm of possibilities for the Amazon, sort of, huge EBIT mover with AWS. Also noting their edge AI. Imagine your car is a robotic edge AI device. Beyond just collecting information for, FSD, imagine the key for your car is a phone, for instance, a Tesla phone, right? Stuff like that. I also want to note the EV infrastructure kind of boost there. As GMs and the Fords of the world pulled back on spending, Tesla can step up on new spending for AI, for FSD, for their supercharger network, which they're using legacy OEMs for, that sort of thing.
And how much Pras is also the bullishness there, because is his bet also in part he's looking at rivals who are kind of pushing out these EV-related investments and saying, okay, that's runway for Elon Musk?
Right, as the legacy guys pull back, gives you an opportunity to push in and spend more and gain more market share in those Tesla car adjacent stuff, right? Software, supercomputing, and the EV infrastructure stuff, like the charging networks we're talking about. That's sort of a big deal there. But I just want to note that it's funny because not funny, but it's his model for 2030 and beyond includes these services as being a huge factor in Tesla's profitability and revenue growth there. So it's something that we've seen other bulls like Dan Ives talk about that as well. It's just so far out that I think that's why clients are saying, hey, what about next year?
Morgan Stanley just disclosed a $30 trillion opportunity for Tesla, and you're not going to believe what it's all about. Tesla is about to experience a significant surge in its valuation, and it may be sooner than many investors expect. So if you're a Tesla bull, get ready to have your expectations shattered as we reveal the untold story of Tesla's secret weapon, and it's going to leave you in awe.
Is Tesla an AI play? I mean, Cathie Wood would tell you so. Elon Musk himself would tell you so. He talks about full self-driving. He talks about vehicles that go around in Texas and California for days without a person operating those vehicles. Where do they stand as an AI play and self-driving autonomous vehicles?
Yeah, I mean, obviously, Elon sort of, set the moonshot for automotive excellence when it comes to self-driving. Every automaker, I think, today is an AI company, just like I think that every tech company today is or has to be an AI company. But AI isn't limited to simply just the autonomous driving. There are a lot of other systems in the vehicle that leverage AI. So whether it's entertainment or communications or productivity or diagnostics, all of those things are going to require AI increasingly. And so, yes, absolutely, AI is a huge component of the Tesla story moving forward.
There is a hidden Tesla gem that investors have continued to ignore, and it could potentially be the biggest catalyst in Tesla's valuation. Today, we're going to unravel this hidden Tesla catalyst and the reasons why Tesla is poised to generate huge revenue from it. We're also going to explore a unique expert approach from Tesla that has been revealed by Morgan Stanley. Join us as we embark on a journey to uncover Tesla's strategic incoming masterpiece and how it translates into a lucrative revenue stream. Let's get to it.
When I look at what Morgan Stanley's saying there, a couple of things come to mind. One is going to be about Tesla and their full self-driving real-world AI effort, comparing and contrasting to what's happening with the ChatGPTs and Bards and so forth. And then the second piece of that is how it actually relates and is useful in a manufacturing environment, that comment about basically anything with a camera. So starting with Tesla's real-world AI and these physically moving objects, they have these 6 million robots that are driving around all over the world. And that information is being, the three foundations that are critical for AI is that that input coming in. So that data that's being collected now for many months and now years that Tesla has this huge data advantage. The second piece of it is obviously the infrastructure and the ability to process that data. And the third piece are the AI engineers. And Tesla is proving from a real world AI perspective to be leading in all three of those facets. And with their promise of Dojo of having, the world's largest supercomputer online basically in a year from now. So when you break that down, I've got my Model X, my 3-ton Model X that's moving through the physical world where I just hit a control on the steering wheel and the car is driving itself. It's taking video in and it's doing controls out. That is, I think that's the contrast that Morgan Stanley is trying to draw here versus, these AI, these chat AI bots or these language models, basically, which are very impressive, ChatGPT-4, Bard, and so forth. These things are very impressive, but they're doing things in kind of in a portion of the world that doesn't impact the physical world as much yet. And really, I would say a lot of my input that I put into those language models, when I asked for a response, for example, when Tesla posted a picture of the bot team, the Tesla bot team last week, one of the things that struck me is that's actually a pretty small team to produce that robot. Hardware, software, do all the physical manufacturing and prototyping. This is a pretty small team. So I said, hey, ChatGPT-4, can you count the number of faces in this picture? And also I asked Bard to do the same thing. And neither of them, even though OCR, optical character recognition, has been around for decades, Bard was incapable of being able to do that, and so was ChatGPT-4. And I just think of that versus the decisions that my 3-ton Model X has to make navigating through the world. It really doesn't have the option to not just say, I'm not going to make that turn, I'm not going to do that. I mean, if it runs into a situation where it doesn't understand the input, it will tell you to immediately take over from a safety perspective, but those are rare. And we talk about takeovers, or we talk about, interventions, and we get wound up if we have a drive with one intervention or two. And here, I would say a large percentage of the time when I use these language models, I'm not getting the output I want, or it's refusing to give me an answer. So I think that's what Jonas and the team are drawing, this contrast between, the physical world AI versus what's happening with language models.
Investment bank Morgan Stanley in a recent note expressed its bullish outlook on Tesla and its Dojo project. According to Morgan Stanley, Dojo is not just a tool to improve FSD, but it's also a potential source of new revenue streams and competitive advantages for the company in the emerging field of vision-based AI. Tesla has also been making headlines from its ambitious plans to develop a supercomputer called Dojo, aiming to accelerate the training of AI models for autonomous driving and beyond. At first, Dojo seemed like one big elephant project, but now it's starting to look a little bit more like a revolutionary masterpiece. Hey guys, welcome back to Tesla Tomorrow. Morgan Stanley analysts have argued that Dojo could enable Tesla to tap into new markets that extend well beyond selling vehicles at a fixed price, with things like robotics, healthcare, and security. They also suggested that Dojo could help Tesla reduce cost, increase efficiency, and shorten its timeline for achieving autonomous driving. The investment firm previously upgraded Tesla's stock to overweight from equal weight, and raised their price target from $250 to $400 per share, a potential upside of nearly 50% from Tesla's current stock price. And that's not all. Morgan Stanley also called Tesla a top pick and noted that Dojo could add a whopping $500 billion to the automaker's market value. But why have we said this? Let's find out. But before we do, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Morgan Stanley analysts based their optimistic valuation on the assumption that Dojo could generate $6.5 billion in cost savings for Tesla over the next couple of years, and that Tesla could capture 10% of the global vision-based AI market by 2030, which they estimate is going to be worth $1.5 trillion. They've further acknowledged that while Tesla has their Dojo set to be a moonshot project that has many uncertainties and risks, Tesla has a track record of delivering innovative products and services that challenge the status quo and disrupt existing industries. Interestingly, Tesla's AI is not just limited to Dojo. The car company's also announced it's got plans to build a humanoid robot using the same AI software and hardware as its vehicles. The Tesla bot is expected to be prototyped by 2024, and it's going to be able to perform various tasks that are dangerous, repetitive, or boring for humans. Tesla's got big AI ambitions, and they're all a part of its broader strategy to achieve sustainable growth and profitability in the highly competitive EV market. And Morgan Stanley's been taking note.
So as you take a look at shares of Tesla, keep in mind that this call from Morgan Stanley is a substantial one. Adam Jonas raising them to overweight, changing the price target from $250 up to $400. And here's his summation in terms of why he believes Tesla potentially could be in for a long, long run higher. We believe that Dojo, that is the supercomputer that Tesla has built and is working on, can add up to $500 billion to Tesla's enterprise value, expressed through a faster adoption rate in mobility, that's the robotaxi, and network services. Software as a service is a big potential within the auto industry, not just for Tesla, but for all automakers. By the way, nobody's really tapped into it yet. Tesla has approximately 400,000 vehicles that have full self-driving technology. Doesn't mean they're autonomous, because they are not, but they have that technology, the Dojo supercomputer, as they continue to refine it and to use the next generation of chips that Tesla is developing. According to Adam Jonas, they could have substantially lower costs. And that's the reason why he says, if you were looking for somebody who could really take advantage of AI and the next generation of chips, take a look at Tesla. By the way, we're showing you Tesla versus NVIDIA. Keep in mind that Tesla uses NVIDIA chips right now, but the idea being that as Tesla develops its own chips down the road, it will have lower costs and ultimately could get to the end game in the auto industry in terms of autonomous driving much faster than anybody else.
This is not the first time the firm has revealed its money-making opportunity for Tesla. Earlier this year, Morgan Stanley revealed Tesla's biggest money-printing machine. It's a strategic approach that could help the automaker penetrate deeper into the EV market, further solidifying its long-term position as global leader in the EV business. The investment firm stated in a note that since financing is now the norm in the auto industry, and since most of Tesla's early sales were done in cash, the automaker has matured as a company and now has the cash flow to support a finance company. Adam Jones further examined, and he mentioned that Tesla is well positioned to make informed leasing decisions based on a wealth of data. And without a competitive financing offering, the automaker risks missing out on a potential sales opportunity. You see, Tesla has several money-making opportunities, and it's not just limited to cars. The automaker has also started stating that it looks a little bit like Apple, particularly in terms of its business model and revenue strategy. Both companies had a first-mover advantage, which could be one reason why several analysts like to compare both brands. Tesla has also been compared to Apple numerous times over the years and has always been done so in a positive light. While they are two completely different brands, it is easy to make a comparison between the two of them based on their products. Even though Tesla is known for its groundbreaking EVs and Apple for consumer electronics, their strategies and philosophies exhibit certain commonalities that have contributed to their success. First up, both companies are operating under a well-understood formula. Consumers are the subject, and tech giants are the ones in control. From the time they hit the mass market nearly a decade ago, Tesla vehicles have gained a reputation as iPhones on wheels. A revolutionary technological leap that did for cars what Apple's smartphone did for consumer tech. And on paper, Apple and Tesla have got a lot in common. Each has followed shared visions for their leaders to come from behind and become integral parts of their respective markets. They've also constantly and consistently pushed boundaries and introduced revolutionary products to redefine their markets.
And as long as we see those moving up, and they are moving up, whether you're talking about battery technology, it's going to take a long time to catch Tesla. And what I mean by that is the traditional automakers. It's the only company with an AI that has designed its own AI chip for autonomous driving, taking a leaf from Apple's book. Apple was the only company to design a chip for a smartphone, a computer in our pockets or pocketbooks, and change the game.
The deployment of Dojo and the training of Tesla models is all a crucial thing to position Tesla as an automaker to be reckoned with. And they're crucial for portions of the automaker's efforts to deploy advanced AI to consumer products. It's especially important for solutions like Autopilot and FSD, which are designed to replace humans, and Optimus, which is there to perform tasks that are boring, repetitive, and dangerous. From Tesla's previous updates, then, it is expected that Dojo will power the future generations of Tesla products. And after its official initial announcement, several Tesla investors expect to see further information on this microchip, as well as the practical applications of the chip and the new processing power and machine learning specializations and how they'll be used. The Dojo has been built from the ground up by Tesla to focus on pure machine learning, meaning that it isn't backwards compatible with existing products, but has been specially designed to power the next generation of AI technology. With Dojo, Tesla is expected to finally be able to take full advantage of its large database of real-world driving scenarios, which it's been accumulating through millions of vehicles for years now. There are also opportunities to grow revenue, and this is where it gets really interesting for Tesla investors. Elon Musk disclosed earlier this year that Dojo's potential is very significant, and the supercomputer's got the potential to become a sellable service that Tesla will be able to offer to other companies in the same way Amazon Web Services offers web services even though it started out as a bookstore. Musk also added that Tesla's supercomputer can be used to train car models way faster and for less money. Tesla uses this computer to train machine learning models for FSD software, and Tesla customers experience the benefit of training on increasingly large datasets with improvements to the software over time. The theory is that the faster the data engine spins, the faster Tesla will achieve its promise of FSD. So by having a more efficient and faster computer with Dojo, well, it's incredibly important, and according to Morgan Stanley, Dojo could represent the next step change in market perception of Tesla, and the car company could leverage this unique position as a leader in both hardware and software to create a powerful AI platform that could rival the likes of Amazon, Microsoft, and Meta. Tesla has been investing heavily in R&D, expanding its production capacity and diversifying its product portfolio, and at the end of it all, this will start to reflect in its stock price. So investors need to get ready. What do you think about Morgan Stanley's comments? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.